Hey. Yeah, 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 yeah. Let it get you. All I want is let it get you.
Mortgage Talk is on, where you receive good information for your mortgage needs, such as mortgage programs and foreclosure programs to help get you out of foreclosure. Stay tuned and hear what's coming your way.
I go with wrong. My life's uncertain. There's no place I'd rather be. Standing here beside you, my love. Your love always comforts me. So thanks for being a friend. Yeah. Over and over again. I can never repay. Love is something. Wow, what a steal. Just live? Man, can you see me? Can I see myself? Join the broadcast. Okay, I'm trying. Okay, this is crazy. Okay. Okay. Done. Whew, finally. We're here. Holy cow. Did it take that long just to get here? Man, we're live. We're here. Trying to work everything out, being in a hurry, getting here for you. Had a customer that required a lot of time and nothing wrong with that. And I appreciate being able to do that for her and to answer the questions. And I still have another customer within next at 3 o'clock. So, whew, we got to get through this show pretty fast, huh? Okay. Welcome to Mortgage Talk. I'm Rick Montgomery, and we're late start me because I had a last minute customer and I could not stop and I could not in until I know that the customer pretty much understands what I was speaking of, and I had to make sure. And she was a senior, a wonderful lady, beautiful lady, and I just had to. So I do apologize for being a little late. Okay, so didn't get a chance to really set up anything too much, and we do have the microphone right there that I could do. We have an overhead light that I think is too much lighting, and I want to get to our topic today, because our topic today is talking about reverse mortgage 2. Reverse mortgage 2. We talked about reverse mortgage last week, and we talked about that because it was something that a lot of people need to know about, especially our beautiful seniors and those at age 62 and those that are older. So usually those at age 62 really are not quite ready for reverse mortgage unless they are at a disadvantage, financial disadvantage, or medical disadvantage. Usually then they need some extra income to really help balance them out. Okay, so I want to get started here on reverse mortgage because I have a lot of information that I want to share with you, and I have to go through it pretty quickly and get done in time. So I'm going to do this for you and hope that I can bring about some clarity and some understanding about reverse mortgage. It's just another optional tool to use. Reverse mortgage is not for everybody. Okay, it is not for everybody, but it is a good tool that you can utilize. And so I just want to tell you about the tool so you can utilize this tool if it is the right tool for you. Okay, reverse mortgage, which is known as a home equity conversion mortgage. Let me say that again, reverse mortgage, which is known as a home equity conversion mortgage. It has an acronym of HECM, and you may hear me refer to that throughout the broadcast. It has an acronym of HECM, and that is home equity conversion mortgage for homeowners. Okay. There are some questions out there that I took questions that what people had asked me, and then there were some questions out there that I saw on other mortgage talk shows, and I didn't like how they answered the question. They pretty much touched on it, but they really didn't answer it completely. They made it like it was so difficult for you to understand, but you got to come into my office and then I can sit down with you on a one-on-one and I can give it to you. Mortgage Talk is under the umbrella of Information Center, where we give you nothing but the facts within the facts, none of our own personal opinion, but just the facts. We don't try to reinvent the wheel. We just tell you about the wheel. I've been in the residential mortgage industry for over 20 years, and I've done so many loans, and I know it like I know the back of my hand, and I'm still in tune with it. Why? Because of you, my faithful listeners. Mortgage Talk. Mortgage Talk has earned over 63,375 listeners. Yes, it is a big drop from what we had at 68,000 listeners. And yeah, even a bigger drop when we had 100,000 listeners. But that's the way radio is. That's what happens. You're going to go up, you're going to go down. You're going to meet an average, then you're going to go up, then you're going to go down again. So it's up to you to try to find the equilibrium and to rise back up again. And we believe that we do so by giving accurate information that you can even verify, that we encourage you to verify, to do your own research, and you'll find out even more information and even have another door to open up to something else. You never know, but at least you can verify the information that what we're giving you and then confirm that information as well as grow within learning more about the situation of that information, of that program, that what we are talking about. That's what Mortgage Talk is all about. We believe in an educated consumer is indeed the best customer, and that's what we want to give you. Currently, I am an insurance I'm an insurance broker. I run my own agency, and also I am a commercial mortgage broker. That's what I do. Okay, that's my business. I chose that field. I did 20 years of residential. That's it for me. But still, you still have a correlation over to the commercial end, and I've been bit by the bug of the gift of giving. So I do believe in sharing information with you and help you to become that educated consumer. Well, not that you're not, but help advance you, help you to be able to understand different programs so you can firmly stand in your square and be the educated consumer who's indeed the best customer. That's what Mortgage Talk is all about. So I said all that to say that when some people advertise and they want to get you into their office so they can get a deal out of it, that's not what Mortgage Talk is all about. We don't try to get you deals out of it. I don't do residential, so I'm not trying to get you in here to get deals. I just want to answer questions that you have, and you can do so by emailing me just by going to mortgagetalk1@gmail.com, mortgagetalk1, number one symbol, @gmail.com. You even go to my Facebook page and inbox me if you want to help it grow. My personal Facebook page is maxed out. 5,000, that's it. That's all I'm going to do. Now I got people carrying me. My son, I think he just showed me how I can click on so people can follow me. I don't think I quite got it that well, so I need him to come back to kind of help me out a little bit on that. But Mortgage Talk Facebook page is now taking off, and it's growing just as well. So we're encouraging you to join us just by going to www.facebook / my name in small caps, Rick, RSCK, Montgomery, MONTGOMERY, and / 370-177. That's Mortgage Talk Facebook page. Join me on that. Let's blow that up too, and let's make things happen. Okay. So with that said, the home equity conversion mortgage program, better known as the reverse mortgage, the acronyms HECM. We want you to be further, as I mentioned earlier, educated before making your decision on whether reverse mortgage is for you. I'm going to talk about some options in there too that you can consider just as well. Okay. Question number one: what is a reverse mortgage? Interesting question. First, it's a type of loan available only to homeowners starting at age 62 or older. Okay. The HECM is different from all the other types of mortgage products. For an example, give you what makes it different. It does due to for as long as the home. Whoa, said it again. I just messed that up. And I wrote it. It does due to, thank you, for all long as the homeowner lives in the property as the primary residence. Say that again, because I know I wrote and messed it up. Basically, you have to be the primary resident and live in the property. It cannot be no investment property. You can't get the reverse mortgage and then jump out of it and go somewhere else. If you do, they will call the loan due. You understand? So it has to be your primary resident. I don't know what I was thinking when I wrote that. Homeowners must continue to pay your property tax. You are responsible to cover the property tax. The reason why that I say that, because a lot of times the people that do reverse mortgage are people that the homes are paid for, okay, or almost paid for, okay, or halfway paid for, okay, and they don't have escrow. So if you don't have escrow with your lender, with your current lender, what's going to happen in the reverse mortgage process? The reverse mortgage lender, if there's enough equity there, it's going to require you to pay that loan out, okay? So the house can be free and clear, and then you'll get the balance. So you're going to be responsible for the escrow. Now, some reverse mortgage lender will provide you, listen now, will provide you with escrow. Well, amen. So they will provide you with that if you ask for that. Or you have to get you a non-interest bearing account, which is a checking account, and you will put in, just go back to your statement on the amount that they took out a month that went to your escrow, and that's what you would have to put in there. Since if you're going to get the reverse mortgage in a lump sum or in a monthly payment, then you take out, listen to what I'm telling you, train yourself. Then you take out what used to be taken out for escrow. You take that amount out. Because what is escrow? A non-interest bearing account that covers taxes and insurance. Okay. So you can help train yourself with that by putting that money into that account. So when time to pay the taxes, you got the tax money. When it's time to pay the insurance, you have the insurance. Okay, you can do that. Even if you start reverse mortgage and get the lump sum, listen to what I'm about to tell you. It's very, very important. Pay the insurance, because you can only do it. All insurance company allow you to pay a 1-year premium. You cannot pay no more than that. They will not accept that. So when you are going to get your reverse mortgage, and if you choose to get it in a monthly installment, I know I'm jumping ahead, but I got to give you this point. If you choose to have a monthly installment, then make sure that because you can get one lump and then start the monthly installment. Did you not know that? Yes, you can. So you can get enough to pay your homeowner's insurance and for 1 year. So you had that to worry about. So now when you get paid on the monthly, you can be putting it in the non-interest bearing account called a checking account, putting that dollar amount that you was doing when you was making your mortgage payment with the mortgage company. You was putting the entire escrow amount, you was putting in there. Now look at your taxes. If your taxes for the first 6 months was paid, well, then you take out for the second 6 months and put that in the account, and then start your monthly payment coming to you with reverse mortgage. That way you stay ahead of the game, and you'll keep your property tax and homeowners insurance and mortgage protection insurance. I'm going to talk to you about that. Mortgage protection insurance. Insurance is the key to everything. So you need to cover your homeowners insurance, pay that a year in advance. You need to get your mortgage protection insurance, pay that a year in advance, and you need to have your escrow for your taxes. So if that's been paid for the first 6 months, you take the second 6 months and you put it in that account. Okay, protect yourself if you're going to do reverse mortgage. Got to move on. So the HECM is a different form of a mortgage type program. Okay. Homeowners must continue to pay, as I mentioned earlier, property tax, homeowners insurance, and mortgage protection insurance. And I'm going to explain that as we go along. And the upkeep of the property. You are responsible for that. Okay. If you fail to do those things, and you don't do any of those things, they can call the loan in. Okay. Homeowners should also have mortgage, as I mentioned earlier, mortgage protection insurance. What that can relieve stress, and this is very important for you to have. Now, understand this, because I'm about to get into the details of why you're going to need homeowners protection insurance. Okay, you're going to need it. It's for yourself, it's for the family, and it's for your estate. Let me go on, because when I get to that point, I'm going to elaborate a little bit more. According to the 2013 study done by the National Council on Aging, reverse mortgage may help seniors to pay daily living expenses. It will assist them or they can assist their growing adult children with their everyday lives and their everyday struggles that they may have. They can use the funds to support their grandchildren, even provide a policy for their grandchildren that they can have when they become an adult. They have revenue funds being built for them. A lot of grandmothers and them wants that for their grandkids, and now they can use some of their money to do that. Most important, the funds can help seniors with their everyday living and help them to be stress-free and enjoying their life knowing that the bills will be paid. Wow. Food will be on their table with no hesitation or no consideration. Medicines will be bought, and there's no choosing between food and medicine. There is no downside of borrowing money from friends and neighbors. There's no downside of getting the church to give you a helping hand. So it adds to what you currently are having, whether it is Social Security benefits and pension benefits. It adds to that, and it doesn't offset it. Whereas if you get too much of it and it's greater than your Social Security, so what? You don't have to report it, and you do not have to lower your Social Security. Isn't that beautiful? So that's what reverse mortgage is all about, and that's what reverse mortgage can do for some of you. More importantly, in details, reverse mortgage works by using a portion of your home equity to first pay off your existing mortgage if it's not paid off yet. After paying off your mortgage, the reverse mortgage lender will pay you any remaining proceeds from your new loan. Did you hear that? Let me say that again. In details, reverse mortgage works by using a portion of your home equity, a percentage of it. And normally they'll do 50%, 65%, 70%. They don't too much like to go over that. Okay. So it will take a portion of your equity. And each percentage is based on case by case base, by the way. So they'll take a portion of your equity and they pay off your first existing loan if the property is not already paid off. Okay. After paying off your mortgage, your reverse mortgage lender will pay you the remaining proceeds from the new loan. If the home is paid off free and clear, it just means that that's just more money for you on a monthly base, or one big lump, or a combination of all three, which is a line of credit that you can have. Those are 3 points of how you can get your money. A line of credit where you write it as you need it. One big lump, you don't have to worry about it anymore. Monthly payments, or you can get all three. You can get a certain amount for a line of credit as you need it. You can get a lump to kind of like cover those taxes. Remember I was saying about the stuff earlier, that what you need to pay off earlier: 1 year of your homeowner's insurance, 1 year of mortgage protection insurance. Okay. And also covering your property tax, putting that into that account when it's time to pay the last installment. Remember, your property tax comes in 2 installments. You can pay it all in 1 year. You don't have to necessarily wait for that to come to you. You can actually go down and take that amount instead of putting it in an account. Just go down and just pay it. Just pay it, because you can pay it early. Okay, then I said, no, we don't want that money. You can't come here, it's too early. No, they won't. That county will love you and will invite you in. They ain't gonna give you nothing, but they'll invite you in and you can pay it. So that's what you can do. Now, remember this: if you pass away, unfortunately, we'll miss you, but if you pass away, the loan becomes due. If you pass away, that's one of the areas where the loan will become due. Now, that's where you, the educated consumer, the best customer, comes in to protect your estate and family with mortgage protection insurance. If you pass away, the loan becomes immediately due. I'm going to be repeating this. If you walk away from the property for whatever reason, the loan will become immediately due. If you fail to keep the upkeep of the property in your contract agreement, the lender can call the loan due. If you fail to pay the property tax, if you fail to keep up homeowners insurance, the lender will call the loan due. Now, mortgage protection insurance. Mortgage protection insurance, because you just use some of the money to pay off the loan, or or the house was already paid for, but you got a loan out of it, okay? That they pay you. Instead of you paying every month, they pay you. That's the difference about reverse mortgage and any other program. They pay you. They can pay you every month. Just like you go pay your mortgage every month, they pay you every month. Whatever amount you want. Hey, when I pay my mortgage every month, you pay me that every month. And they'll pay you that every month. They'll give you a lump to get started, but they'll pay you every month. That's the difference of the entire program. However, if something at the end of that program, which is normally lasts for 25 years, and I'm put all that together in that. Most of the times, at the end of that, now it's time to pay the debt. Most of the time, a lot of us have moved on, okay, and left the estate with our children. Now it is our children's responsibility to pay it off. Why would you want to put that kind of pressure on your kids? Why? Why would you want to leave them with a debt and you don't pass away, move away, regardless if you use the money to help them and to pay for them and to get them what they needed? The fact is that you're leaving that debt with them. And one way to teach our grown children too, as well as teaching our baby grandchildren, is responsibility and taking over the responsibility, okay? And protecting your end of the responsibility, because it's all on you. It's not on them. It's not their responsibility to pay for it. And then two, you want to leave them something and not leave them a debt. Mortgage protection do that for you. So if something were to happen to you, mortgage protection will pay that house out. You can use the mortgage protection for the full value of the home. You can use mortgage protection even if you're not on a reverse mortgage, just to cover the loan on the home. So something happens to you, they pay for that. If you happen to slip into foreclosure, you can contact them and borrow money to reinstate your loan. Mortgage protection will keep you out of foreclosure. You want more information on that? You need to call me. You need to call my office at 708-572-7855. You got to talk to me. I'll send you out information on it. Ask me questions, I'll answer it. Let me be the one that can help you and tailor it to your need. Mortgage protection insurance. So on the reverse mortgage end, you want to have mortgage protection insurance. If something happens to you, then it will pay off that loan. Isn't God wonderful? It will, because you'll get it for the full value of the home. And if you don't know it, the reverse mortgage lender is going to have an appraisal done, so you know what it is. And so, and then wait till you see how low cost that it is. Remember, you need insurance for everything. I'm not here to try to sell it to you. I'm here to let you know about it and the need for it. You got the need for it if you're on reverse mortgage. You got the need for it if you're a homeowner. That's about it. The rest of it is up to you. I'm not going to twist your arm and do all that stuff to convince you to do the right thing. I can only just present it to you. You make the final call on what is it that you want to do. Now, getting back to this. Reverse mortgage. If something happens to you, it will pay off that loan. So your heirs do not have to be responsible for that. And it will leave money left over for your heirs. And you can put that in a will, how you want that to be broken up. Now the house is paid for. Now your baby can move into the house and start her family or complete her family. Or the kids can sell the house and divide the proceeds up. You receive what you needed from that beautiful house that you have. You got the reverse mortgage to help you. Isn't that wonderful? Isn't that beautiful? So you can live comfortably. Now, with mortgage protection insurance, very inexpensive to have, with mortgage protection insurance, it covers you when God called you home. And when he calls you home, your heirs, your family, your baby do not have to figure out, how am I going to pay this debt off? Because it's what it is, because you covered it and you taught her and him how to do the same thing when their time comes to. You covered it, and you covered it for the value of the home because of the percentage that you will get from the mortgage protection, 50%, 40%, 70%, whichever is which. It will cover not only that debt, but leave enough money over to give you beautiful, a beautiful burial, and at the end also leave money for the siblings. Now the house can be utilized to be lived in or even sold and divided among the 2 or 3 siblings because you left a will. You left a will. Okay? Now, gotta move on. What are some of the downsides of reverse mortgage? Or what's the operation on the loan? Okay? Some people look at it as a downside, but it's not. The operation of the loan. The loan balance increases over time as interest on the loan and fees accumulate. As home equity is used, fewer assets are available to leave to your heirs. See why you need to call my office and get signed up for mortgage protection insurance? Got to move on. Keep that. Just keep that in mind. You can still leave the home to your heirs, but they will have to repay the loan. What process for this loan? What's the process for this loan? There are 5 steps to processing reverse mortgage. Okay. A completed application. When you do a completed application, it is a legal authority giving the lender permission to process this loan. But the lender cannot incur any costs on your behalf until step 2 is completed. What is step 2? Step 2, seeing a reverse mortgage counselor, which is a HUD counselor. Okay, they want to talk to you. Are you sure that this is what you want to do? Do you understand reverse mortgage? Are you an educated consumer to understand the concept of reverse mortgage? We can give you a crash course. However, sometimes a crash course is not enough. So you're going to have to do some work on your own or listen to Mortgage Talk faithfully, and then you can get a lot of the details of what reverse mortgage is all about, and they'll do some confirmation of the information that I'm sharing with you. So now when you see that counselor, guess what? You can stand firmly in your square. Got to move on. Step 3, an appraisal is called. A appraiser will come out to appraise the value. You can take that value, you can contact my office, and we can get you mortgage protection insurance, okay? That appraiser will be a FHA appraiser who is also a FHA inspector. So don't be surprised if you find a couple of things that need to be repaired. That's going to be included into that money that you're going to get to tighten the boat. Remember, as part of reverse mortgage is that you have to keep up the upkeep. So if there's any downfall of any upkeep, he's going to report that. It's going to be in his report. That's going to be in the appraisal, and the reverse mortgage lender is going to bring it to your attention. We need to get this taken care of. Okay? Understand that, right? Got to move on. The 4th step is the underwriter. The underwriter collects all data, your data, the appraiser, what the appraiser said, follow up on it to make sure that will be taken care of at closing. You will sign that agreement to that particular point. They will hold that amount for that particular point. And then with all that done, the underwriter signs off on that. And then step 5, you go to close. Got to move on. How does reverse mortgage loan get paid? How does reverse mortgage loan get paid? Wow, that's really interesting. I know time is really ticking on me, but I'm going to keep going here. How does reverse mortgage loan get paid? Reverse mortgage is different from other loans products because repayment is not accomplished through monthly payments. Okay. Instead, it is repaid all at once at loan maturity. Loan maturity happens if you sell the property. Loan maturity happens if you transfer the title over to someone else. Loan maturity happens if you permanently decide that you're going to get up and walk away and leave the property. Got me? Got to move on. Seniors' concerns about reverse mortgage. A lot of seniors have some concerns about reverse mortgage because they really don't understand it. They've heard all kinds of different points, so they really don't understand it. So the senior concerns is reverse mortgage is a ripoff. The answer to that question is no, it is not a ripoff. I'm going to say it again. Seniors' concern is that reverse mortgages is a ripoff. Question, no, it is not a ripoff. Now, seniors has been the victim of scam contractors, scam artist contractors that fast talk them into using the reverse mortgage funds to pay for home improvement. They target financially strapped homeowners to scammer them to a loan professional to apply for a reverse mortgage. Even some loan professionals, you got to be careful where you go, could be scammers. Okay? Some of them work for banks, some of them work for mortgage companies, some of them work for credit unions. Okay? Not all, not all. So reverse mortgage is a way, is also a way to avoid foreclosure, and they'll use that to a financially strapped senior by saying, you're behind, go get the reverse mortgage, and this needs to, that's not a contractor that says that. That's usually a loan officer that knows a little bit more that says that. Okay, so be careful of those things. Okay, be careful. I'm very, very quickly because I know time is ticking. I'm because I got to end at 3. On something like that. Okay, my dad never used his insurance for nothing. If you need a roof, use your homeowner's insurance. A lot of and I'm talking to you, my stubborn seniors. I love you, but you are so stubborn. You would not use your homeowner's insurance for nothing because in your mind, the way it was given to you back in the 40s and the 50s and the 60s, traveled down from your dad to you, is that if you use your homeowner's insurance, it's going to go up to the roof. Your insurance going to go up to the roof. You want better. And to get some insurance from another company, they're going to charge you a lot of money. False. 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 If you have multiple claims consistent within a year, they will drop you. If you have multiple claims and get dropped, then you go to another carrier, then they're going to charge you a little bit more. But if you have a claim, and that claim is to fix the roof, which is what? Improving on the property, it's not held against you. So anyone that tells you that that's not, anyone that tells you that it is lying to you. It is not true. So you don't have to be afraid to get your roof because you're scared that your insurance is going to go up. That is not true. And if you have a company, listen to what I'm about to tell you here. If you have a company and that company want to talk crazy to you, then you need to get on the phone and call my office at 708-572-7855 or call an insurance professional that you're comfortable with and let them move you from that company to another company, because you don't have to be bombarded with fake truth. Because if you have a claim that your insurance can take care of, that's what you paid them for. Use them. Got to move on. Susan Omer said something. It's really interesting, and I rarely quote her anyway. But Susan Omer says about reverse mortgage. She says that reverse mortgage would, I mean, she said reverse mortgage is a better option. But then she went on to say this. She says her reason is as follows: the 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 heirs, your heirs, will have a better chance of recuperating the lost value of stock over the years, since the stock market recovered faster than the real estate market. I think it's kind of contradicting when she said that there's a good option. Well, I'm here to tell you, a lot of people are dropping out of the stock market. Stock market is doing a good job. It can do a good mark, but you better know what you're doing in the stock market. Real estate has always been a very, very consistent investment. Before the market fell in 2008, it was the strong point that really held the market together, by the way. So real estate is the right key for that. The reason why that I threw that quote out there, because it was out there, that some people listens to quotes like that and say, oh my God, I got a better chance on playing the stock market than I do doing a reverse mortgage. That's not true. That is not true. You got a much safer way to do the reverse mortgage than you do trying to play the stock market. I'm thinking it's like it is, because most people that play the stock market don't know what the hell they're doing. So they lose their shirts anyway. But if you know what you're doing, then you know when to sell, when not to sell. You don't just get stock and then just sit on it. Okay, unless you got good history about that company and you know, and based off its charting, it's constantly rising up. So then that's a different story. But most people play the stock market, monitor the shares, monitor the company. As soon as something tips a little bit, they sell, move on to something else. They sell that stock, move something else. They have probably about 10 entities out there or more, and that's what they do for business. Monitor the stocks and sell. Go sell. Keep, sell, go. And if you're not doing that, if you can't play that game right there, reverse mortgage is a good key, is one of the good keys that you should be considering for yourself, especially if you are a senior. I don't know no senior that's going to go throw their money in the stock market. So, heck with what she's talking about. Okay, moving on. Alternatives to reverse mortgage. Alternatives to reverse mortgage. You may want to consider traditional cash out mortgage refinance programs. Okay. The second lien mortgage programs, there's another option that you can use. Okay. Or you can sell the home. That's an option that you can use. And you can sell a home to a family member. Okay. You can use the HELOC home equity line of credit. These are options that you don't have to. You can consider, along with considering the reverse mortgage. Remember, reverse mortgage. This product is designed to create retirement income from home equity. It may not be the best solution for everybody. Okay, got to move on. Another way. There's something called, and you may have heard about it because I got this question asked to me. Is there a such thing of private reverse mortgage? Is there such thing of private reverse mortgage? Answer to that question is yes. Let me explain. Private reverse mortgage works like a reverse mortgage, except the interest and the fees stays in the family. Your children make regular payments to you, grandma, you, grandpa, and when it's time to sell the home, they recoup their contribution that they paid you and interest, although it's not free to set up this type of arrangement, because you want to do it through an attorney. It's typically much cheaper than getting a reverse mortgage through a bank. Save a lot of fees, save a lot of other stuff, okay? The home remains an asset for the estate, the home remains an asset for you and your children. That's the difference between private reverse mortgage, okay? And usually for kids that have money and that can do that, okay? Tick, 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 tick. I see, and I'm moving kind of quickly. Okay, bottom line. Reverse mortgage may be good option for people who are house rich and cash poor with lots of home equity, but not enough income for retirement. Remember, reverse mortgage may be less expensive than other home loan equity loans. Tell you. How long does reverse mortgage last, Rick? Well, reverse mortgage lasts 25 years, okay? But I got to put the clause in there. You will likely owe more than for the home is worth. For an example, the house is valued at $200,000. You took $100,000 reverse mortgage that's at 50% at 5% interest, and you at age 62 or more, and the term is 25 years. Okay, but the interest on that 100,000, value at 200,000. Okay, and you took 50% of my pension. Okay, taking out a reverse mortgage does not generally make you ineligible for your pension. Say it again, because somebody missed that. Okay. Taking out a reverse mortgage loan does not generally make you ineligible for your pension, but you need to take care, as CentralLink does, improve condition on any payment income test. What that means is that no, it does not affect your pension, okay? Because it is a what's the word I'm looking for? It's a what's the word that I'm looking for? The word that I'm looking for. Oh my God. It's been paid to you from the lender, okay? It is not income paid to you. And by it not being recorded like income being paid to you, it doesn't count against your pension. I'll say that again. It does not count against your pension. It is there to aid you with that because it is not income, nor is it recorded as income being paid to you from the lender. So therefore, it does not alter or lower or stop your pension, and you don't even have to report it because it doesn't. And even your pension people know that, okay? Who owns the home in reverse mortgage, okay? Reverse mortgage is a rising debt, falling equity loans, since you are taking money out of your home, and since you make no payments, the balance goes up and your equity goes down, but you own the home. Okay? You, the homeowner, still own the home. Do you pay income tax on reverse mortgage? Answer to that question is no, you don't, because it's not income. No, you don't. Reverse mortgage payments aren't taxable. Reverse mortgage payments are considered loan, that's the word that I was looking for, loan proceeds. It is considered a loan proceed, not income. So it doesn't affect your pension and you don't have to pay taxes on it, okay? The lender, because the lender paying you, the borrower, okay? What are the three types of reverse mortgage? Glad you asked that question. Single proposed reverse mortgage offers by some states and local government agencies as well. Nonprofit. Single proposed reverse mortgage is one. Proprietary reverse mortgage. That's what I just talked about private reverse mortgage. That's what that is called. Proprietary reverse mortgage. That's private reverse mortgage. Federal insured reverse mortgage. We talking about that. FHA, federal insured reverse mortgage. The HECM. That's what it is. Home equity conversion mortgage. Those are your three different types of reverse mortgage. Okay? So you have it right there. Those are your three different types. Now, how much do I need in equity for reverse mortgage? 50%. 50% of your equity will be used for reverse mortgage to pay off whatever liens it is and to give you the remaining of that. Okay? What is the catch with equity release? Good question. What is the catch with equity release? Equity release plans provide you with a cash lump sum or regular income. The catch is that the money released will need to be repaid when you pass away or move into a long-term care. You will hear under reverse mortgage terminology. That's why mortgage talk try to give you terminology so you can get comfortable. Mortgage terminology. What is the catch with equity release? That's what you're going to hear people say. Well, this is the catch to equity release. You know, what the hell is he talking about? Okay. The catch with equity release. Equity release plan provides you with a cash lump sum regular income. That's reverse mortgage. That's what it does. You can take it in a one lump sum. The catch is that the money released will need to be repaid. You know that's not to be paid back when you pass away. Because the term is for 25 years. If you make it past that, well, you're still gonna have to pay it. Okay? Or move into a long-term care. Now you've been moved into a long-term care because you became sick, you're unable to take care of yourself, you're unable to take care of the house, the loan will become due. Okay? That's what reverse mortgage is. Those are the ins and outs of reverse mortgage. I hope that you got something out of this. I know I'm trying to rush you because I'm 4 minutes down and going. I appreciate you. I will be doing the radio show on reverse mortgage. That's going to be coming up probably at 6:30. That's going to be coming up. So I will be doing that, and I will be on today with that. So I thank you so much. I gotta go. But I'm glad that I'm able to share this with you. I really pray and hope that you got something out of this. God bless you so much. May He forever keep you, and thank you so much for listening to Mortgage Talk. I appreciate you wholeheartedly. Good night. Goodbye, everybody. See you soon right here on Mortgage Talk. I'm Rick Montgomery, your host. Wow. Good.
On, where you receive good information for your mortgage needs, such as mortgage programs and foreclosure programs to help get you out of foreclosure. Stay tuned and hear what's coming your way.